Happy tax day, everybody. So if you like treating your taxes like cramming for a midterm paper due at midnight and waiting until the last minute to file today, I wanted to make this quick video going over a couple things to consider for last year's taxes and next year's taxes. So let's first talk about IRA and Roth IRA contributions. Now, most people don't know that they can actually still contribute for the 2022 tax year until this year's deadline, which is today. And deciding between the two can be a little bit tricky, so don't hesitate to reach out if you do have questions. 2022 was largely a reset for the tax code, which is kind of like a reboot of a bad TV show. Many tax benefits during the pandemic expired, no longer apply for this tax filing season, such as the enhanced child tax credit. Parents who received $3,600 per kid during the pandemic now will only get $2,000, and that's only available for parents with children under the age of 17. During the pandemic, the IRS also expanded the Child Independent Care Credit to help working parents pay for childcare. But it is now returned to a maximum of $2,100 instead of $8,000 for parents who have multiple children. And fewer filers will be able to qualify for these credits because of the income qualification essentially reverted to what it was before the pandemic. For charitable contributions, only those who itemize can now deduct charitable payments. And the adjusted gross income ceiling, that cap on charitable contribution, cash contributions, is back to that usual 60% cap. But it's not all bad news. We can focus on the bright side a little bit. There's a couple tax breaks that we can take advantage of, like the new electric vehicle tax credit. So essentially, if you bought an EV in 2022, you could get a credit of up to $7,500. You just want to make sure that car was assembled in North America after August 16th, 2022. There's a bunch of other requirements as well. And for those of you living in Michigan, based on recently finalized financial data from last year, Michigan income tax rate decreased from 4.25% to 4.05% for 2023. Not for last year, but looking ahead to this year. And it is a permanent change to the income tax rate, as it's expected to return to 4.25% on January 1st, 2024. And finally, we don't want to forget to consider tax losses. So if you had any after-tax investments last year, chances are you had some losses, and hopefully you engaged in tax loss harvesting to book those paper losses. So for example, even if you took 20 grand in losses, you can still use 3,000 of that to offset your ordinary income for this year, and then that remaining 17 grand of capital losses would carry over to following the future years. So that would be reflected on your 1099 from your custodian, so you don't want to forget to include that when you file. Now, getting money back from the IRS might actually seem like a good thing in terms of a refund, but it actually means you overpaid your taxes. And with interest rates on the rise, every dollar that you overpaid last year could have been earning you interest instead of the IRS. So it might make sense to adjust your withholding for this year to avoid overpaying again. We don't want to give the government more of an interest-free loan than we have to. So there you have it. These are some of the essential things you could be made aware of just before the tax deadline here. And remember, the deadline to file for 2022 or request a 6-month extension is today, April 18th. But you'll still need to pay any taxes you owe in order to avoid any penalties or fees. It's essentially an extension to file, not an extension to pay. And lastly, and separately, in continuation of really my original mission of launching my firm almost 3 years ago now, here to provide the best service possible. In addition to being a CFP, I've now passed all 3 exams required and have been admitted to practice as an enrolled agent before the IRS, which is essentially the highest credential awarded by the IRS. So next year, we'll actually be offering tax prep for many of our clients as kind of a one-stop shop type of service, with the idea being that we're doing so much proactive tax planning already that the formality of actually filing the return seems like a logical continuation of providing a best-in-class client experience. So with that said, happy tax day, which sounds like an oxymoron. Don't hesitate to reach out if you have any questions on anything. As always, take care and stay on point.